Hey, the NBA.com. This is John. This reports for the 8th. And well, we'll look at right here. We've been seeing these narrow ranges. This was last Thursday. And then we got that sell signal right before the end of last Thursday after the little run. But the previous short from way up there, the 76 range, happened again, right at the what? Well, just under 76. So, it's a 30-point difference roughly. And they all saw what happened when the NBA weight started to take the lead, and this was Friday's action. Now, look at that size difference relative to the orange verticals here representing a day, and you begin to see this one day, twice the volume. Literally, it's 2 days combined at least right there, and yeah, that was clean as it gets with a little pop right now, but right at the 23%, but you're already at peak. So we'll see what happens on the first pivot lower going forward from there. When we look at it from an intraday, it was even cleaner. So that was the Wednesday action, then the Thursday. Then when we started with the Friday, it was right here coming forward and literally didn't have to do a whole lot of anything. I mean, there were still brief spurts, and some of these were decent runs, 15, 20 points in between. But I mean, just scrolling across here, you can see how much more the volume is than we've been talking about, and that's so typical of down days where people are running for the hills. There was like, why is this happening all of a sudden? It's not all of a sudden. You had this extreme buildup. We talked about how funds really would prefer to pay less when they have new money coming in for a month, and this sort of corresponded perfectly within that. But then you also have quite a bit of money of new IPO offerings that are about to come out, and some people want to get out the door of their gains so that they're ready to jump into the next new thing, which is obviously going to be what you got OpenAI, SpaceX, even Meta is going to offer another, 80 or so $1 billion in new offerings and things. And so this is what appears to be the plan is to issue new share equity for the uh, continued AI expansion because there just isn't enough money in the whole, transition. Oh yeah, I'm going to commit to this $1 trillion to buy your chips, and you're going to do this in the cloud and buy up my service. And it was just this circular thing that, narrative-wise, was starting to fade off pretty well amongst people when they were looking at the revenues that were going to be generated off this, and just didn't make sense. And so you need to have that as free capital from stock offerings. So, SpaceX is another great one because look at that. I mean, he bought Twitter at a pretty hefty price, folded that one into the XAI. XAI folded into the SpaceX, and literally any losing operation is all folded into one that actually is, bringing in some revenue. Yeah, mostly government, but still, uh, it's a good move. Basically, end up with zero losses, so can't complain about that. It just took few years of reorganization, blah, 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 blah. And this is so classic when we look at this from a daily standpoint. I was telling you how this distance between 76 and 100% was just uh, excessive. And when we talk about market declines, 66% faster than, normal upticks, and it wouldn't take much to fill this all back in. Did we get all the way there? No, no. We got more room to go. We still have to get the 7280 range to fill this positive extreme. Uh, and then we have another further back, but that's already been filled, and so has the earliest one. So you'd have to go all the way back to here to find a unfulfilled one down at the 66 range. But coming off the initial pops, those are usually the last ones that you're focused on. It's usually the mid-range ones that took place right here and over here on the extreme histogram. And it's just a matter of looking for that magenta below the 33 and finally getting enough MBI weight short. You can see didn't quite develop enough until we got just before the day started there, and intraday it became rather clear, and then it just exacerbated itself. And that's how it goes. They start to run for the hills, and then one computer clicks onto another, and pretty much there's no buyers, and you just get a cascade effect, and then buyers pop in and more people short into that, and that's what creates the whole move. But you can see how in one day you wipe out in almost a half month of move. It's typical. Actually more healthy than continuing straight up as we've been going. So you also have the Iran situation still unresolved, still not going. And then, frankly, I think the comments from the president probably were more of a frightening one to the market because they understand now that all of this is an elected choice, that he's chosen to do this with oil as far as the conflict. And he thinks it's the best case, but at the end of the day, these values, we're all paying for it, and that's just going to continue its ripple. Now, does it have other geopolitical impacts? Sure. So, one might argue he's playing a longer game for some other reasons. Yeah, this is definitely a killer for the EU and stuff like that. But you know, does it really bring the U.S. complete market share? I don't know that the Iranians are really all that affected, and you basically have created a quagmire. I don't know how else you're going to describe it. You're not getting anywhere. Keep extending peace deals is leading to nothing. So, could it be a miscalculation? Well, time will tell. But that cost factor certainly not great. And I had talked to you about how the impact was going to hit Europe very soon, and that this is continued now, really getting hard to justify uh, where the euro is at all, simply because there could be stop flying planes and all sorts of other things are going to get restricted. You may even see gas shortage rationing type of events like you saw in the early 70s. Because they don't have the capacity that the U.S. does now. Of course, all these countries that have been using their reserves and stuff like that, they're coming to the end. And it was always just a question of who could outlast. Was it the Iranians from their pumping, or the reserves from the West? And it looks like the Iranians are probably going to come out on top of that one. It just is what it is. I'm not favoring anything, but you got to look at what the market's going to do in response to that. Now, you get a big sell-off like that. Of course, gold here retracing back down to lows. But when you think about lows, 4,200, even if you dip down here into the 41 something, still not that low relative to where it was prior to all the inflation that's been built through, and it's still going to rise back up. It's just a matter of waiting for that. All the CPI numbers to start going, and then you're going to be looking at will the Fed be raising rates? And I know that's the market's next concern, because at the end of the day, what else do they have choice wise? You're going to be looking at inflation that's a choice, not accidental market forces. It's going to be a budget buster from a deficit standpoint. Absolutely insane. But, is some of this retaliation, for Trump not getting his legislative desires and or the Supreme Court on the tariffs? Who knows? It doesn't really matter, does it? You still have to just play with what is. So when you look at Bitcoin as well, this has been, they had the nice pump from, the Iranian extortion moves, getting their insurance fees through crypto, and then boom, all of a sudden, when it's not there, there's not a whole lot of support because the market's been going up, still within a short cycle, and you haven't reached your end period for the short cycle for Bitcoin in general. I think that goes all the way to the end of the year before you would get your normal turnaround. So it could potentially even go further into the 40s or 50s. But for all the people who've been getting into it and all these crypto strategies, they're also hurting. So you're draining a lot of this excess liquidity that had been built up, and you get oil prices under control, and then you have a kind of a deflationary setup. You don't have more money chasing less because these people have all had losses one way or another throughout most of the time. So it creates a little bit of a shift. So do I think of it as, I think of it as more of a clearinghouse cleansing. So from that standpoint, though, you don't have close over the 23% yet, and until you do, it's still, in my book, you're at best tepidly from a 5K chart, looking at short pop moves as opposed to a duration, you have no steel reset, and you can see that from here now. Every time it pops above 13, yeah, you're going to get a little bit, but this particular case, no. So we're going to watch right here, a cyan, green, whichever direction those two break. If cyan is able to pop back up, green goes down, then you can expect a return to the zero. Likewise, a move of green over cyan, well, then you're going to pop up to well over the 38% most likely. So those become very clear, easy to see from a 50K and even from the lighter, and that's certainly going to impact in the daily. But narrative wise, what's the incentive to jump in at this particular stage? And if funds want to buy into the new offerings, they may not even be interested in spending any cash right now. They just may be closing out some of their profitable positions to move into these different new offerings. So we'll see how it plays out, but the dynamic is still there, and you just have to play it as it is. That's the long and the short of it for now. Anything relevant, I will put it on the team chat. Have a good one. Trade well.